Hello everyone, great to have your company on 𝐾𝐤𝐼𝐴 TV. I'm James Preston and you're watching The Buzzing Trends. In today's show we'll be taking a look at prominent ASX travel stocks under the spotlight in September. But before we jet off with these travel stocks, it's important to assess the current travel climate in Australia. The Australian federal government is being tested by an increasing demand to introduce COVID-19 testing standards for the travel sector. As the sector has been severely impacted by the pandemic, it's been a difficult period for the sector to try and recover from the blow dealt by coronavirus-related curbs. The Morrison government has taken a major step towards establishing a vaccine passport for international travel, awarding a contract to international IT company Accenture for new digital passenger declarations. The declarations will replace incoming passenger cards and COVID-19 travel declarations, capturing information including vaccination status to facilitate international travel at a scale into Australia. Last week, the government suggested it will have a system in place within weeks to enable recognition of vaccination status for international travel as vaccination rates continue to rise. With the world facing uncertainty on the economic and social front, the travel sector continues its southward trend. However, there are some travel stocks that have achieved a healthy recovery in financial year 2021. So let's have a look at some of the top ASX travel stocks for September, beginning with Sydney Airport trading on the ASX with the ticker code of SYD. Being one of the largest airport operators in Australia, Sydney Airport has a market worth of 22.58 billion Aussie dollars. The airline's half-yearly results continue to reflect the impact of COVID-19 restrictions on travel, with revenue declining by 33.2% from financial year 2020. As per the financial year 2021 half-yearly report, the airport's total passengers declined by 36.4% to 6 million. That resulted in a revenue decline of 33.2% at 341.6 million Aussie dollars, whereas the EBITDA stood at $210.8 million. The airport operator has recently announced to receive a revised conditional and non-conditional binding proposal from the Sydney Aviation Alliance. This consortium provides 100% acquisition of the stapled securities in Sydney Airport at $8.75 cash per stapled security. Sydney Airport shares were trading 0.12% lower at $8.22 during the afternoon session. The next company on our list today is Wiseway Group trading on the ASX with the ticker of WWG. The ASX-listed leading integrated freight and logistics operators, Wiseway Group, has delivered an impressive performance for the year ending June 30, 2021. The company's revenue stood at 126 million Aussie dollars, an increase of 23.5% from financial year 2020. Wiseway's EBITDA, however, stood at 8.1 million Aussie dollars, a jump of 62% from the previous year. The group also witnessed a strong operating cash flow, up 83% from the previous corresponding year to 7 million Aussie dollars. Wiseway shares were trading at 36 cents during the afternoon session. Time now for a small break, but stay tuned with 𝐾𝐤𝐼𝐴 TV as we explore some more prominent ASX travel stocks that are under the spotlight in September.
Hi, I'm Sage, and get ready to take the crypto ride with me on 𝐾𝐤𝐼𝐴 TV. Watch the Crypto Buzz every Tuesday and join the excitement at 𝐾𝐤𝐼𝐴 TV. From Bitcoins to NFTs to Dogecoin and DeFi, we have updates about everything around these digital currencies. Understand the investing rationale and the risks involved in the space with me, Sage, on Crypto Buzz. Keep watching 𝐾𝐤𝐼𝐴 TV.
Hello and welcome back. It's great to have your company. I'm James Preston and you're watching The Buzzing Trends Show on 𝐾𝐤𝐼𝐴 TV, live from Sydney. Today we're exploring some of the prominent ASX travel stocks that are under the spotlight in September. And if you've missed any of the stocks mentioned so far, don't worry, as the full show will be uploaded onto our YouTube channel, 𝐾𝐤𝐼𝐴 Media, shortly after the conclusion of the live program. But let's now turn our attention to the third company on our list, Webjet, trading on the ASX under the ticker WEB. Webjet provides a full range of online travel booking services for flights and other travel-related services across the country. as the company has maintained a strong focus on managing cash burn during the 9-month period from the 1st of July to the 31st of March 2021. The reason why it's important to keep a check on the cash burn rate is that cash is required to take care of everyday expenses such as salaries, raw material and also overheads. Without this cash, the company's survival may well come under threat. Webjet's revenue fell to 453 million Aussie dollars in the 2021 financial year to date, whereas the total transaction value declined significantly to 38.5 million Aussie dollars due to the impact of COVID-19, according to its latest report. However, Webjet's EBITDA stood at 125.3 million Aussie dollars, with earnings per share also declining by 46.2 Australian cents. Webjet shares were trading 1.49% lower at $5.95 after the lunchtime trade. The next company on our list is Qantas Airways, trading on the ASX with the ticker of QAN. One of Australia's leading international and domestic airlines, Qantas Airways has commenced its recovery journey, reporting a positive statutory net free cash flow for the second half of 2021. According to its financial year 2021 results, the underlying EBITDA stood at 410 million Aussie dollars, whereas the statutory loss before tax came in at $2.4 billion, despite a revenue loss totalling 12 billion Aussie dollars. Qantas maintained a strong liquidity of 3.8 billion Aussie dollars, while the net debt declined from 6.4 billion to 5.9 billion dollars. Qantas shares were 0.18% higher, trading at $5.44 during the afternoon session. And the final company on our list today is A2B Australia, trading on the ASX with the ticker of A2B. A2B Australia is a booking and dispatch technologies and payment solutions provider for personal transportation services across Australia. A2B, however, has achieved a healthy recovery by regaining 84% recovery of its pre-pandemic revenue. The total revenue stood at 113.4 million Aussie dollars for the year ending June 30, 2021. A2B has maintained a strong liquidity position, with net cash estimated at 10 million Aussie dollars with zero banking debt. The underlying EBITDA stood at $3.7 million, and the underlying net profit after tax was reported at 15.8 million Aussie dollars. A2B shares were trading at $1 Aussie dollar and 36 cents during the afternoon session. Alright, well that's all for this episode of The Buzzing Trends. Hope you enjoyed the show, and let's keep our fingers crossed that we might soon get to enjoy travel beyond our borders. I'm James Preston, signing off for now.